Hi, Randy Finney here with Right Side of the Chart, and today is Friday, July 19th, 2013. I'm doing this video after the close today, and I'd like to do a quick recap of what happened this week and what I'll be looking for going forward next week. I'll spend most of my time here looking at this 15-minute chart. For those of you who follow the site, I put up a few static charts and explanations of how I use this 15-minute time frame, a few of the buy and sell signals on the 15-minute time frame that I follow. And I wanted to just talk on that real quick. You can take a look at those static charts, and I believe I did a video on this last week as well. But I look for preferably two, ideally three or more of these signals triggering in close proximity, and that is up on price. I look for trend line breaks. I have these trend lines, both uptrend lines and downtrend lines as well. Of course, a break of a downtrend line signals a buy signal, and a break of an uptrend line, such as we had here or here, gives you a sell signal. Down below on the stochastics, I look for a cross down below 80 or above the 20 level. And this is a histogram, as I again covered in those other posts and videos. It's a histogram simply of these two moving averages up here. You have this aqua line and the purple line, which are the 14 and 34 EMA. And this histogram gives you a quick visual on when we have crossovers and can help you to identify divergences in the between those two moving averages. So a cross below or above that zero level indicates a crossover here on those lines. And then finally we have the MACD. And for that, I use a cross above or below the zero line, which is the dotted line here. Okay, and as I mentioned, I did a video last week regarding some of the longer term trending indicators on the daily, weekly, and monthly time frames that I use. And in that video, I had mentioned that the shorter you go down on time frames, the more likely you are to experience whipsaws. In other words, when you move down away from a daily chart into the intraday charts, such as a 60-minute time period, 30-minute, 5-minute, 15-minute that we're looking at here, the more frequent the whipsaws are going to be. At least that's my experience, because you have a much faster set of moving averages and more, we'll call it random noise. But you have, when you go back out, let's say all the way out to the weekly chart, you have very few whipsaw signals. Once you get a buy or a sell signal, those signals tend to come early in the stages of a more lasting trend change than you get here on the shorter term time frame. So with that being said, we did have a whipsaw this week. On Wednesday, I had posted that we had 3 of the 4 signals triggered, and shortly after that post, we did have the 4th, which was the stochastics crossing down below the 80 level, and that was an official sell signal on the 15-minute time frame. But the very next morning, prices gapped up, and all the indicators, the MACD, the 1424 EMA pair, as well as the stochastics, all crossed back above their levels, negating that sell signal, putting the market, the 15-minute chart, back on a buy signal. And so that was a whipsaw. Now, in percentage terms, it was very little. The move from where the sell signal came right about here, I'll put up a set of a horizontal line, to where we gapped up the next morning. I checked it was roughly 0.3%. Even as of the close today, we closed slightly under 1% above where that signal was triggered. So, not a very bad whipsaw if you were to get in short and then get out as soon as those signals reverse. We had another whipsaw back here, but if you look at, again, follow the crosshairs, where the signal came to where you were told to get back out, the damage was minimal. So pretty much those were whipsaws within this larger uptrend here. Now, I just started using this system recently. Can't say that I was in it for the last few months, but it's something that tends to be working in this market. And as I mentioned, when I'm using moving average pairs and other things like that, I will adjust and tweak them as time goes on because market conditions change. But one of the constants here is typically on almost any time frame is the MACD above or below the zero line typically defines up and down trends. And as you can see here, following this system, we had negative divergence on the oscillators. We had the moving averages about to cross, but we did not get the cross. And if you look how close, we had a few close calls here where the MACD had bounced off the zero line, even going back here, as well as this 1434 EMA pair. You can see that we came close to signaling sell signals, but never did. So overall, it's been doing a pretty good job. Now let's just take a look a little farther back. The one limitation I have with this TC2000 charting program is you can only go back, I think it's 200 candlestick periods in time, which isn't very far on a weekly, or I'm sorry, on a 15-minute chart. So I'm going to zoom out to a 30-minute chart. Now what that's going to do, because I did not change the frequency, I'm still using a 1424 AMA, the same MACD, it skews these signals. So disregard, don't pay attention to the divergences. And over here I have a lot of these lines. This is skewed because I haven't changed the settings here to reflect the 30-minute time period. However, with that being said, the buy and sell signals are still lined up approximately where they were before on those charts. Those lines stay the same. So we're just looking at a longer time period. That's all I'm doing here, folks, going back, doubling the amount of time. And as you can see, let's start over here on the left side of the chart. We had this trend line coming in, and if you follow my cursor down here to the bottom, we are looking at a cross down. We had a 1434 cross, as well as the MACD down here. So if you look at the vertical line, we had a sell signal given on the MACD, a sell signal given on the 1434. The stochastic hadn't populated yet because it needs a few extra periods before those numbers begin to start populating on the chart. But we had, at least 3 out of the 4 sell signals given. And in fact, the stochastics is the one I put the least weighting into. I put much more weighting into the MACD and the moving average pair. So this was a sell signal that would have put you in here and caught this move down. Now, as I also mentioned in the longer term trend indicator video that I did recently, when using such buy and sell signals as these moving average crossovers, moving average pairs, I put a lot more stock into the actual buy or sell signal given than I do on the exit signal. In other words, once this sell signal is given, it's been my experience, and again, I discussed this in the video, if you wait until these pairs cross back over, well, you've already given back a lot of your gains on a short move, and ditto or vice versa on a long signal. What I do is use these primarily to give me a heads up on a potential trend change, and then try to get in early, get positioned early, and then I will use the support levels that I've identified, horizontal support levels, trend lines, etc., on charts on various time frames as my exit. Now let me give you an example. This signal here, I'm looking at the crossover. We had our MACD go bullish here, make a bullish zero line cross, the 1434 pair, and that, let's get it right there lined up, that wouldn't have gotten you out of your short position to about right here, thereby giving up a lot, nearly all of your gains. However, let's see where the market bottomed. That was, oops, I need to throw this up for confirmation. That was on, as you can see, if I can get these crosshairs zeroed out, on June 6th. You look in the upper right-hand corner, it shows the date. And if you recall from my 4-hour SPY chart, go back and you can reference this on the site. For back at that time, we were short here, and I had my first target listed back well before June 6th as the first of this horizontal line or this uptrend line here. And back on June 6th, again, you can reference that. We hit that target, which was a time, especially for a more active shorter-term trader, to cover any short positions, maybe reverse long. I did expect more downside. In fact, I did and still have additional downside targets. We did have the expected bounce off T1, meaning the first target, move back down and then reverse just shy of T2. My expectations, we were going to go down to T2, continue lower, and I admittedly was caught off guard. I did not expect such a strong move up. from where we went. So we've by far exceeded my bounce expectation. But again, let's come back to where we are today and take a look at what may happen going forward. So again, wanted to show you the history of this signal going back a little bit longer term. It is pretty much put you in short or put you in long early on a lot of these major trend changes. Again, revisit the history on the 15-minute chart. These earlier periods were covered, but as I jump back now, we're still in a 30-minute time frame. I'm going back to that 15-minute period, which only shows the last few signals. And again, this was the last long buy signal. We had a very solid, clear move from the MACD, which had been above the zero level for a while. We had a solid move above. And as you can see, the MACD has stayed there, came back, tested that zero level, didn't fall through below until we had this brief whipsaw and this brief whipsaw here. So at worst, it would have took you out for a few days and put you back in. Would have took you out for half a day here and put you right back in and had you long most of this uptrend. Now, let's take a look at what's going on. We have a combination of this orange uptrend line. Let me zoom in a little bit here. You can see I've added this orange uptrend line, which has done a pretty good job lately of defining this. We have 1, 2, 3, 4, 5 plus clusters of tags on that trend line, and right below that is this primary uptrend line, at least primary on this 15-minute time frame, where we have this move off the lows, another tag here. And what I'm looking at is these two trend lines in close proximity. Now, ideally, what I would like to see Monday morning would be a gap up to give us a higher high here on the SPY. Bring this MACD up a little bit, bring the 1434 EMA histogram up a little bit, and what that would do is give us some nice positive divergence. We'd have the SPY up above making higher highs. We would have this histogram come up here and then roll back over making a lower high. And same thing here on the MACD. And if you take a look, we've seen the MACD, look at the successive peaks. We've had a couple negative periods of negative divergences, and each one of those has played out for a correction. This one was very shallow. It didn't give us a sell signal because we didn't have any confirmation below, but yet, as you can see, when we get these trend line breaks, at the very least, you're looking at a little bit of downside or consolidation. We had another one here. The sell signal came pretty late in that move, but we had a nice move down from the trend line break. And if this trend line breaks, it will more than likely propel prices below this longer term uptrend line, which is a more solid uptrend line. And if we did get that gap up on Monday morning, like I said, that would be ideal. And we still have divergence. We can see these indicators turn back down. We could see the MACD roll over. And in that case, I would just draw the divergence like this. Just from my experience, I would feel a little bit better with that higher high, especially a big gap up in the morning, to just put the knife through the heart of the last of those people short. Myself, I'm still net short. In fact, I'd probably add on a gap up in the morning with a stop on those lots and maybe some other positions if we were to close the day higher. Because if we continue much higher, these divergences here will be negated. In other words, I don't know if that's technically a double negative, saying the negative divergence will be negated, but in other words, we'll put a new high in the MACD, a new high in this histogram here with this moving average pair, and prices going on to make a new high. And if that's the case, the market will probably continue higher into next week and possibly beyond. So that's what I'm looking for. Ideally, a gap up in the morning to put a clearly higher high here in the SPY, and then to see prices quickly reverse and ideally break below both this trend line and this trend line here. Take a quick look at a 60-minute chart. I'm going to show you what this trend line looks on a 60-minute time frame, what it looks like. And here's that trend line. Very steep. As you can see, the MACD is rolling over. That's not the most picturesque divergence I've seen, but it is divergence nonetheless. Price is going on here to make higher highs, while the MACD is confirming to do the same. I have not updated this chart. This is probably a longer term target, but initially what I'm looking at is this gap right here from about the 166.50 level down to roughly the 165.70-ish level, we'll call it. If this trend line breaks, that would be the first support area. There's some horizontal support as well going back here at the bottom of that gap. And then we'll go from there as far as targets go. Here's a 130 period exponential moving average, which I believe is the same as the 20-day moving average. And that would be my next trending indicator. When we see the 20-day moving average, or on the 60-minute chart, the 130 period moving average roll over and start sloping downward, that as well is another early signal that the trend is, at least the near term, the very short term trend has changed from bullish to bearish. Okay, folks, this has been Randy Finney with Right Side of the Chart, and I hope you enjoyed it. Have a good weekend.